Hey guys, thank you for stopping by. Don't forget to subscribe, like, and share. And I hope you enjoyed this interview.
Hi, Nancy. Good morning.
Good morning.
Absolute pleasure once again.
Good morning. Now let's get started. And let me start with this question really. As someone that watches the markets, you play in it, you speak to people, investors, you allay a lot of concerns. You try as much as possible to do your permutations and combinations. What is the most risky headwind that Nigeria is struggling with right now? The most risky one?
Hi, Nancy, and good morning to your viewers and listeners as well. I would say that the biggest risk element that we have at the moment is actually policy consistency. There's been significant policy moves that have been made by the federal government across different sectors, and we can talk about that later on in the show. And what business is trying to do is come to grasp with those policy moves, get a better understanding of what it means for them with regards to the future, and what everyone wants to be able to do is to predict with a high level of certainty where the mind of government is at concerning specific direction for the economy, and ensuring that in another few months, we will not see an abandonment of the clear policy directions that the government has started over the last few months. As you know, it's almost a year that this government has come into existence. The market will be looking for stability and clarity on a go-forward basis.
Okay, let's deal with that a bit. You said policy inconsistency. What do you mean by that? Because this government will really tout itself and take pride in that, okay, we were able to do bold reforms that some other governments couldn't do. We came in at a difficult time. We removed fuel subsidy. We devalued the naira and all of that. Those are bold reforms that the president, when he goes abroad, he mentions it. His ministers, governor of central bank mentions all of that. So what do you really mean by policy inconsistency?
So I meant policy consistency,
Okay,
actually.
okay,
So rather
okay,
than inconsistency, what,
okay.
what the market wants to see is that when you've taken a course of action, then you see it through. I mean, we can agree on whether the full subsidy on fuel prices have been removed, right? Because we know that there seems to be a price disconnect between what the real price should be in the event that it was a clearly driven market as against what we're currently paying for fuel prices. So I know that Nigerians wouldn't like to hear that, but the reality is that in one way or the other, there is still some subsidy being infused into the price of the PMS market. And what we just want to be seeing from government is that everyone is singing from the same hymn sheet. If the direction is that we're going to see a tightening of monetary policy, then the same thing should be happening at the fiscal level, so that everyone is effectively heading in the same direction. When that happens, then business is able to make decisions on a long-term basis. The problem we had with the Buhari government was you really never knew what was going to come out the following week. And as such, you couldn't make long-term plans.
Do you have a sense of knowing what can come out of this government the following week? Do you have that is it bird's eye view, or do you have that crystal glass eye view, or perhaps a witch doctor now, for lack of a better word to do to say, okay, I look into this glass of water. Okay, Tinubu and his people will do this next week. Do you have a sense of that?
So I would say that you honestly should have. In reality, because the messaging has been quite consistent from the first day the president came in, which was that we want a market-driven economy, an economy that is driven by market forces. Of course, with government playing an arbiter role. Or an arbitration role, an arbitrator role, an intervention role, and I think that is somewhat clear in some of the policies that we've seen from them. And if I was to judge based on the behavior that we've seen in the last 12 months, I would say that probably to a significant extent, 90%, 75%, which is still pass mark. They've been consistent in terms of the policy direction for the country. And the sort of policies we're seeing are all consistent with market-driven economy. And what we're all hoping is that irrespective of the headwinds, that they remain focused on delivering the sort of economy that we're looking to see. There will be backlash. There will be things that happen on a regular basis that look like we should be pulling back. But I think if we continue to hold firm, if the government continues to hold firm, there is probably some light at the end of the tunnel.
We'll go into the Fitch credit reports in a bit, but what you're saying is making me come up with these follow-up questions. And the follow-up question is, it seems that you're seeing some kind of speed on the monetary side. Are you seeing the same speed from the Wale Adun-led fiscal side? And he's also the coordinator of the economy. I was speaking with a guest, was it on Thursday or Wednesday last week, and it was like the fiscal side is not matching up with what the monetary side is doing, and is making us have a lag.
So I think that is consistent. I think that anyone who understands constitutional democracy knows that there are certain things that are outside of the control of the legislators, and there are certain things that are outside of the control of the executive. On the fiscal side, fiscal reforms are not things that can be legislated by the executive. You actually require some level of legislation and legislative intervention to have immediate impact when it comes to fiscal policy. So let's think about it. The Nigerian budget is actually a law. People don't realize that. And ordinarily, the National Assembly can actually go to court to enforce the implementation of the Nigerian budget on the executive. And the likelihood is that the judiciary would actually back the legislature on that. So I would say that it's unlikely that fiscal reforms are going to have the same speed of implementation as monetary reforms. And when it comes to monetary policy, the central bank, by law, has overall responsibility for monetary direction. But when it comes to other economic, drivers like fiscal, it's not just in the hand of the president or the executive. There are laws that guide what you can do. Can you reduce spending when the legislators have already, appropriated? Performance of the budget is also an important part. So I would say that finding a balance within the legislative framework is significantly important. And I think that if we see through the monetary policy moves that have been made and remain consistent, clear messaging from the central bank on what they want to achieve, I think eventually, by the time we're seeing the next budgeting cycle, that should actually filter through, because then the messaging becomes even clearer.
No, but this 2024 budget is also their budget, and this administration will soon be 1 year in just a couple of weeks. Don't you think that 1 year is enough for the fiscal side to really signal that this is the direction it really wants to take? I know that there are works ongoing concerning the revenue generation drive, the Taiwo Yedele committee, and all of that, the Orosoye report, which I think I'll come to in a bit, because we should expect Hadiza Bala Usman's report in the next 2 to 3 weeks, because I've been counting down. The president gave them 12 weeks for February. They think that someone has forgotten. Trust me, I haven't forgotten that. I've been counting down in my own private area, so they shouldn't think that we've forgotten. Yes, because sometimes we easily forget things in this country, especially things around policies and all of that. So what do you think about that, really?
So look, Nancy, it's correct to have high expectations and expectations in terms of speed. What I say is that, look, this government inherited an economy that was significantly overheating, that had lost its way, different multiple directions. And what the first year was supposed to be was to try and create some level of stability. Now, you must also realize that when we talked about inflation the last time I was on your show, I kept telling you that inflation in Nigeria was not exactly monetary driven. It was more a cost push inflation that was based on structural deficiencies within the market. And the fiscal policies are the only ways to solve those structural deficiencies, and perhaps maybe some improvement in the security infrastructure. So the truth is that as much as there's a lot of flexibility when it comes to monetary policy. You don't have the same level of flexibility when it comes to fiscal policy because there are different arms of government, there are different drivers of fiscal policy that you can't just legislate and see implementation immediately. Imagine if we were trying to change tax laws as part of the fiscal policy initiatives. The process of changing tax laws is not a straightforward process. The National Assembly has to debate, they have to go through the process before you have the laws, and then you need to have time to implement and give companies the opportunity to adjust. So I would say that we can't have the same standards when it comes to fiscal reforms as the same standards as monetary reforms, just because of the different strengths or the different policy options that are available to the two different arms of government.
So what timeline would you give to the fiscal authorities for us to begin to see their finger, if not their, because to see their hand now from your own analysis will be a long time. So to at least to see their finger.
So there are two things that I'm looking out for. I'm looking out for the president's speech on the 29th of May, which is in another 3 weeks. I think that if we see a doubling down from the president's speech on following through with his policies, I think that's particularly good. Then the next thing I will be looking out for would be the budgeting cycle for 2025. What are the key focus areas that the government is looking at, and how do they expect to fund the budget? And I think when we see some clarity and some consistency in that, then I can start to say, look, you know what, maybe we're with a government that is serious about fixing the policy options that we have. What you will find with the Steve Oronsanya report, for example, is that there are still legal issues, that there are still legal hoops that need to be, dealt with, and you still need to trust the legislators to see through that process. So again, the president can make all of these fantastic promises, but can his party deliver at the National Assembly? And the jury is still out on that.
So many, from your answers, Femi, you are making me derive a lot of questions, and you are taking me to another place where I know. Make I know.
That's
say
why
I don't
we
know.
enjoy these conversations.
You dey take me to where I know, not be where I don't know. But I'm also a bit trying to be restrictive, to look at some other areas, because it's such always an insightful time with you whenever you're on. You talked about president's speech. I don't know if I should go there, I shouldn't go there. But I'm I'm assuming.
We have time to meet
Okay,
tonight.
yes,
So,
I'm assuming that his speech writers and all of that would have been curating the last 1 year in office, and they would put all of that in his speech. Okay, he did this, this is what has happened, this is what he has done, CNG will be launched, all this. I assume that will be also a major part of what his speech will be. I don't know whether he will announce new things. Let's wait and see. 2025 budgets, which you mentioned, just a few months. We'll also talk about 2024 budget implementation, as it were, before we'll go over to 2025. Now, let's talk about the credit ratings from Fitch. And I know that these are reports that people like you are interested in. When you saw that report, it was released, I think, Friday evening our time, or even Friday night our time. What do you think about it? Fitch has revised Nigeria's outlook from stable to positive, affirming us at B-. Explain this in the most basic term to our viewer.
Okay, so what happens is that when a rating agency issues out a rating, they, in addition to the rating, which determines whether it's an investment grade or default grade, or it's a AAA rated type organization or instrument, in addition to the rating agency gives an outlook. So usually the outlook is either positive, stable, or negative. Now, a couple of things will determine what outlook you get from a rating agency. If the economic outlook is one where the rating agency believes that the trajectory is positive and that the policies are consistent with a positive trajectory, then you will get a positive rating, a positive outlook rating. If they believe that nothing in the horizon is going to change your current status, then they leave you at stable. And then if the direction is that everything is things are falling apart and the center can't hold, then you get a negative rating. And what Fitch has done for Nigeria is to first and foremost reaffirm the B- rating. So again, the B- rating is a rating that is not exactly great. because Nigeria's highest rating was a double B positive during Obasanjo's regime, I think. And we've come a few notches lower since then. But what is clear is that the next level for Nigeria, given this positive outlook, is that if the policy consistency that I talked about earlier on is maintained, where our expectation is that the next time that Fitch issues a rating for Nigeria, it becomes a B rating. And who knows, we might actually get a double notch and it goes from a B to a B positive. So the indication here is that what Fitch is saying is that the next review for Nigeria is likely to see a ratings upgrade. And what it means is that in the relative market, in the relative pricing of securities, the credit risk that investors place on Nigerian credit should reduce as a result of a ratings upgrade. So it is positive. Again, it is a fallout of the consistency that I talked about earlier on in the show, which is Fitch specifically mentioned certain policies that the government has done and stuck with. Yeah. One was the fuel subsidy removal, and the second was the exchange rate market, and of course the seeming removal of subsidy from the electricity market and the continued rationalization of that market. And I think those are positive things that, yes, we haven't seen the impact in the pocket of Nigerians, but when you look at it from an outlook perspective, the trajectory is extremely positive. And I think that should be cheering news. I expect the president to tout this when his speech writers are writing his May 29th.
I hope they are taking notes. I guess they will be taking notes too, to put that into his speech. But just like you said, how does it also benefit the ordinary Nigerian? That is the main thing, because if you're having a credit outlook upgrade, it should speak some kind of positive news and positive sentiments towards Nigerian economy. But that's a different ball game. Let's still stick with the key rating drivers. Just like you mentioned, Fitch actually rated some key reforms as high, and they include reforms by the central bank. They include that the distortions have been reduced in the FX market, the exchange rate liberalization, the return of sizable non-resident inflows according to Fitch, further monetary policy tightening expected. That's actually what they said, even after a 600 basis point tightening by the CBN. So if you take a look at the high, it still falls within the scope of the monetary side, which I was mentioning earlier in terms of the speed and the fiscal side lagging. Now, let me come over to the medium. According to Fitch, fiscal revenue improves, still low, which is fiscal. And what else? Improved oil production, challenges remain, which is also fiscal. What else? Okay, extremely high interest expenditure. Of course, our debt to GDP ratio and all of that. The moderate gross FX reserves, of course, that will fall in back to the monetary side. So what would you have to say really about this? For us to get to a point where, at a point in the country, during President Obasanjo now, where we were, I think double B, if I'm not mistaken. I think you mentioned it earlier. Yes. What would take us to that point? And how long will it take us to get there?
Yeah. Look, I mean, I don't expect our ratings to get to double B until probably 2026 at the earliest. However, there are certain things that you raised that are quite important, and I think viewers would benefit from just listening to this. So look, again, when it comes to monetary policy, because the central bank is the sole arbiter of monetary policy, it has a lot of flexibility and control over the policy initiatives that it can implement. And that's why it's always easier for reforms to come from the monetary side. And now from a fiscal point of view, there's a lot more work that is required. Again, if you look at revenue mobilization, you can't just mobilize revenues by flipping a switch. There are certain improvements, productivity improvements that are required to ensure that you can actually start to track revenues. So think about it, for example. Let me give you a classic example. You want to increase revenues from import tariffs, but your ports are extremely inefficient. You know, people are not able to clear the goods for weeks. Again, until you put in the reforms that clean out the ports, make the ports more efficient so that goods can be cleared on a quick basis, you're not likely to see a significant increase in revenues in that regard. If you look at taxes, for example, companies have to report their annual reports before they can pay taxes. Reporting period is just about winding down in the first half of the year. So the outlook from a fiscal perspective is always going to lag the monetary direction. Now, the key things that should raise concern is, for me, the level of monetary tightening that the central bank has to do to be able to, counterbalance the fiscal rascality that we've seen in the past. 24.75 MPR rate is the highest we've ever seen. I do not expect significant increases in the MPR rate because of what the central bank has done on CPRs and CRR ratios, and loan to deposit ratios. But I think that all of these things contribute to Fitch saying, look, if you looked at Nigeria and the easy wins, which was monetary policy, they've done everything they need to do. We're expecting that they will do the same thing on the fiscal nature. When we look at Nigeria in another 1 year, looking back, we should see significant outputs and benefits from the policy decisions that have been taken. And I think that's the way we should look at the market, not from a short-term perspective, but take a long-term view on the fiscal direction and ensure that as long as the government is consistent, then we should have some comfort there. Now, you talked about the debt to GDP ratio and, of course, the cost of the debt. I think that's a key concern. It's always been a key concern for all the rating agencies. The percentage of our revenues that goes towards debt servicing at some point during the Buhari regime was almost 95%. In fact, the particular year, maybe 98%.
Yes, it was more than 100, even at the time.
At some point, it was more than 100%. Yeah, I think we're starting to see that reduce just because of the revenue improvements that this government has been able to achieve. The target, obviously, is to get this down to 60% over the next couple of years. And I think that when we get to that point, if we do, you will start to see a very quick adjustment of Nigeria's ratings by all the rating agencies, both Fitch and Moody's.
Okay. All right, Femi, let's quickly take a commercial break. And when we return, we will continue our discussion. Do stay. All right, welcome back. Femi Oladehin, senior partner at Argentil Capital Partners, is still with me. Hello, Femi, and welcome back. Now, let's talk about President Tinubu. He will soon be 1 year in office. We've been struggling with petrol scarcity, at least in the last 3 weeks, going to 1 month. And now, though the NNPC Limited has said that they are due to logistical issues, but it's also becoming a bit suspicious, in terms of, for me, from where I'm sitting and I'm looking at all prices rising, and that we know that there's still subsidy, and that also means that NNPC will be needing more money to import, even though they don't want to come out and tell us. And I don't know why they are not being transparent about it. I don't know who they are deceiving, because all of us know, even those they are traveling to go and meet, know these things. So if you take a look at the petrol scarcity thing, what's your view? Then secondly, President Tinubu, 1 year in office soon. Of course, his philosophy and policies have been tagged Tinubunomics. We had Buharinomics, his own policy and philosophy, which was really a disaster. I don't know how we just managed that 8 years. That put us in this quagmire. There were a few positives during Buhari's tenure, but the negatives were more, and really has sunk the economy into where we are now. So which would you really like to take? Is it Tinubunomics? Or, in fact, when I was thinking of this show, I was thinking, should I take it as Tinubunomics or Batnomics? Now, Batman, or Batnomics, Bat, the owl. Is it Bat? Also, and characteristics of a bat. You understand what I mean? Though it's Bola Ahmed Tinubu, but I'm not trying to be mischievous, but I'm just trying to say, okay, which should I take? Tinubunomics or Batnomics? Is it Batman or Bat, the animal? So go ahead. Yes.
Look, 1 year in office by the president, the difference between his government, obviously, and the Buhari government was, he did promise Nigerians he was going to hit the ground running. By looking back, they did try to hit the ground running, put an economic team together, as quickly as possible, and started to let the monetary policy guys at least have a head start. If you reviewed some of the key things that they've done, you could say that when it comes to policy direction, again, there's a clarity. If you woke me up at 3 a.m. and asked me what is the policy direction for the Tinubu government, I can tell you what it is. It's basically the aspirational free market environment, a market where subsidies are targeted at specific sectors of the economy, and where leakages are reduced, a market where we still have a large government, and that is consistent with how they've run the states where they governed in the past few years. They do not understand, private sector-led economy as much as, the other governments that had come prior to now, but they're trying to pivot into a private sector-led economy. So if I was to summarize what I believed that Bathnomics is, or Tinubunomics, it's market-driven economy with a strong government presence, and a central bank or a monetary policy environment that is not influenced in any way, form, or shape by the government. And I think, in summary, the easiest assessment of that government comes from the Fitch Ratings review that we got on Friday, which is a positive outlook. Despite the key headwinds that we're dealing with now, high inflation, weak exchange rates, low oil production.
But those are the things that really affects Nigerians. Those are the indices that really affect me and
lagging
you.
effect. It's a lagging effect. That's the truth. The reality is that the naira that we had for the latter part of the Buhari regime was actually a subsidized currency. And the naira we have today, we believe the naira is significantly undervalued. But the headwinds are what is preventing the naira from having a quick recovery. Now, the problem is the only solution to that is to increase inflows. And there are only two ways to increase inflows: increase crude oil production dramatically, or increase FDIs. Now, FDIs are quicker, they're easier to do, and which is what the government has been doing. We've seen significant improvements in portfolio flows. But when it comes to FDIs, when it comes to the crude oil production side, there's a different problem there, because we had a situation where, Nancy, it took us almost 20 years, 2 decades, to pass the Petroleum Industry Act. That in itself meant that investment that needed to have gone into the oil and gas industry during those years just never happened. And the effect of that is the short in production that we're seeing, where our production has shrunk by almost 1 million barrels. Now, to get 1 million barrels of production we started is not going to happen overnight. You still need significant investment to go into the oil and gas industry, fixing the infrastructure deficit. Our pipeline system is probably the worst in the world when it comes to crude transportation. So those things are going to take time, unfortunately. So which means that we can't really assess this government on the key policy initiatives for another 12 months, because it takes at least 12 months, if not 24 months, to reach feed on any investment in oil and gas.
You know what, Femi, what you're just also saying is actually opening me up to something else, which I haven't really also thought about deeply, in terms of the challenges we're seeing in our oil production, be it upstream, downstream, and all of that, having also an effect, directly or indirectly, even on the NNPC Limited, in terms of either the functionality or even the dysfunctionality, because NNPC Limited seems now to be the operator regulator, is taking a lot more chunk than what it should be doing. So whether because of the dysfunctionality in that space, in the oil sector, and we've seen NNPC just behaving anyhow in the last few years, because of a lot of responsibility, also a cash cow to the government and all of that. So perhaps we should also give NNPC a slack. I haven't even really thought about this in this way, but as we were talking, it was really opening me up to say, oh, okay, if there's dysfunctionality somewhere, someone is actually also bearing the brunt, or some organization, and which in this case is the NNPC.
I can tell you clearly, Nancy, that the only reason why the president retained the current GCEO of NNPC was simply because of that. where he was looking for the competence of someone who could actually look at NNPC and transition it from a solely government-owned, solely government-driven, and all of that, transition it into a proper organization that the hopes and aspirations of Nigerians can be fulfilled through. He felt that the current GMD was the best person to take that role. Now, what the reality is that, unfortunately, in transitioning the NNPC from a corporation to a limited liability company, there were certain things that should have happened. And one of those should have been significant capital injections into the NNPC, understanding that a lot of the NNPC's capital had been eroded as a result of the subsidies and the continuous subsidies that were not budgeted for and all of that. But that did not happen. So the NNPC, as currently constructed today, does not have the resources to very quickly go into its low-hanging fruits, re-enter some of the operational wells, take over some of the IOC's assets and all of that. But they don't have the capital to do that.
Finish the refineries and all of that.
Yes, fix the refineries and all of that. They don't have the capital to do that. They've pledged significant reserves to be able to raise the capital for working capital, and that means that for them to be able to actually increase their capacity to attract additional capital, they need money. So they need money to unlock money.
Basically. Yeah. The thing we're questioning is really the monies that they have or the monies they've had. Have they accounted for it well? I also know under Military, we've seen financials from the NNPC.
It's disappeared under subsidy.
Yes.
Those guys were spending $3-4 billion every year, subsidizing illegally.
Yes. Okay, Femi, I will come back to you. Let's take another commercial break. We'll be right back.
All right.
All right, welcome back. Femi Oladehin, senior partner at Argentil Capital Partners, still with me, and we're having such an interesting conversation. Femi, now let's use the next few minutes. I'm looking at my time, and we have less than about 6 minutes to the end of the show or thereabout. So let's use this few minutes and talk about NDIC. This deposit insurance coverage, what does it really mean? How will it impact the sector vis-a-vis the recapitalization deadlines on the banks that would between March of this year to March 2026? That's one question. The second question I would like to ask also is on the Hadiza Bala Osman. I don't want to leave that hanging so that the federal government knows that someone is watching and not for them just to say something since February and they think we've forgotten. I haven't forgotten. 12 weeks will soon expire. What are we expecting? Because they came out boldly to say that a committee will be constituted to look at the agencies that needs, realignment and adjustment and, squashing some agencies and all of that. So I would like your thought on that. Then your thought on what the federal government is doing for nano businesses. The Minister of Industry, Trade and Investment, Doris Uzokanite, did speak on X, I think last week or so, a few weeks back, in terms of 50,000 Naira grant for nano business. And you know what, Femi, people have been disturbing me. DMs and code that Nancy, where's the money? I said, do I look like minister? So for those that really have applied, please just go on the website and you check out more information. But I think 1 million people, I think the federal government is spending about 50 billion naira for this 1 million people. What else again do I have to shoot for you again? What else? Okay, I think that's about it. And stabilization. Okay, you've talked about that in terms of economic stabilization, but how much patience should we have as Nigerians moving forward? What should be our patient capital from 0 to 10? So I think that's it, then we're done.
Okay, so let's start with Hadiza's committee, or Hadiza as well. Look, we've always known that, one of the things that I said earlier on was that the current party, the APC, and when I talk about the APC, I talk about the Bola Tinubu faction of the APC or section of the APC.
Not the Buhari.
Yes, they're a big government. Their policies are around big government. Now, the problem is they've now come into an economy that needs to rationalize just because of the extreme inefficiencies and all of that. When Hadiza came up with that press conference, with a lot of excitement, I just chuckled, and I chuckled because I said, you have no idea what you're going to be facing. Again, what I said is, you need to marry the legislative side of the government with the policy side of the government. A lot of those agencies that you're trying to collapse into one and all of that came into existence through legislative fiat. Now, you cannot undo that without actually going back to the National Assembly. So I expect Adiza to come out in the next week or two with an interesting report to say, oh, this is what we've done, this is what we're going to be doing. I do not expect them to achieve much over the next 12 months. So that's my expectation on Adiza. Manage your expectations. There's no magic sweep that's going to happen. It's going to take time. Talking about the NDIC, look, I've always felt that the NDIC was completely out of sync with the reality of the Nigerian economy. 5 million naira as a minimum balance for investors, for depositors and banks, sounds like a lot of money. But what I can share to you is that as at 12, 15 years ago, when the IDIC had 50,000 naira and then moved it up to 500,000 naira, the economy itself has ballooned since then. And that 5 million naira now today is actually $4,000. So the impact of that level of confidence in the market is the reason why today we have so much cash outside of the banking sector. If you want to improve the confidence of the average Nigerian in the sector, you have to increase the size of the NDIC, and you have to, optimize the numbers. So let's go to the nano businesses. Look, we all knew that one of the biggest impacts of the exchange rate devaluation and of high inflation was the erosion of capital for nano businesses. It's been significant, it's been severe, and government had to do something to help reflect that capital. I'm aware that a lot of people have been asking questions, when are they going to get their money? In fact, I was on X over the weekend. It was actually on X, I realized that they were supposed to be sending some money to Nigerians because nobody told me. I think one of the ministers had come up with a policy announcement, and all the responses on X is, when are we collecting our money? When are we getting our money?
But you're not in the category. We both
well, that's why I didn't know about it. But they are an important part of the economy. And I think that it's important that the president focuses on this. Also ensures that there are no leakages. So given the thing that happened with Better Edu's humanitarian interventions and all, there is increasing scrutiny on this sort of interventions and ensuring that the real people who should get the monies are the ones that get it. And I think if the government is able to deliver that, hopefully we'll see a reflection of the nano capital base and the positive impact on that on the economy.
Any inflationary concern about this nano business? Because if you take a look at the 50 billion naira, really for 1 million people, out of the 3.6 million, I think they'll be given 50 billion, we can actually, suck that in. Will it really have inflationary concerns very quickly before we go?
50 billion is a drop in the Nigerian economy right now. Okay. One Fidelity Bank is making almost 50 billion in one quarter. So I doubt that a 50 billion naira injection into the market would have any sort of long-term impact.
Okay, finally, patient capital, 0 to 10. Where are we now as Nigerians, and how elastic should we be? From now till when?
Nigerians are probably at 2. I say that we should probably be at about 6 right now. And the timeline for this government is probably another 18 months. I would say that by the end of 2025, if we're doing a review of the last 2 years of the government, or the last 1.5 years of the government, we should be able to see clear indicators that show the direction of the economy and significant improvements. At that point, I'll be able to say then Nigerians can become impatient if there are no results by then.
Okay. By God's grace, we'll be there by 2025, and we'll definitely analyze that.
Yeah.
President Buhari didn't have that. He didn't have that patience capital, because immediately he came in about 6 to 9 months, everything just started going down. 2 recessions, one recession that was self-induced, and the other recession COVID-induced, and all of that. So I think President Tinubu has some political capital. Is it political or whatever it is, the capital around for him?
Yeah.
Thank you very much, Femi. Let's do this again sometime. Thank you very much. I appreciate your insights this morning.
Thank you. Thank you. Thank you.
All right, I've been speaking with Femi Oladehin, who is a senior partner at Argentil Capital Partners. We've been looking at the Nigerian economy, sha, and the financial scene. What more can I say? Please join us again tomorrow for another edition of the program. I am Nancy Naji. Be the best you can be and be the change that you want to see. Bye now. Thank you for watching. In case this is your first time watching us, thank you. Don't forget to subscribe to our YouTube channel, drop your comments as well as like, and most of all, share our content.